Hi, this is Kerry Artak with Wicked Stocks, bringing you your weekly Mag 7 update for the week of Monday, March 16th. I start with Microsoft, still plodding along, testing this longer-term 5-year channel bottom this week at 397.31. If we do not close below this structure by a 1% margin at the end of this week, we still remain in bottom picking mode, anticipating higher trade as we move into later year. Let's take a look, though, at the consequences of closing below 397.31 by a full 1% margin. So a settlement Friday at 393.34 or lower does set off. I'm going to call this a significant sell signal, longer term in scope. Violating a 5-year channel bottom should yield over the next 2 or 3 months the mid to upper 340s, an old high area back in 21, low area in 25. And I think that this has longer term consequences, the violation of 397.31 that could unwind all the way back into the low 200 region over the next full year or so. But until then, this is still bottom picking, and if we can close this week above this descending channel top that's been holding well the last 2 weeks of 406 even, closing above 406 even, I think we're done testing this 390s long-term support. And we should, I'm going to say 2 to 3 months, reach into the 480s. 488.64 can contain monthly buying pressures when tested. That's pretty much it for Microsoft. Let's move on to Meta. Meta put out a sell signal 2 weeks ago that remains intact this week below 667.90. Sellable resistance, able to contain buying through April and below which, with present volatility, this could be within the next week or two. It could also take 3 to 5 weeks to fall to our target at 579.84, this 1-year channel bottom able to contain selling through the rest of the year. We can round up nicely from here. Certainly we would look for buy signals on the way up that would then indicate a good low for the year, but you can bottom pick 579.84 in the weeks ahead for the year itself. And if you can bottom pick something for the year, you can bottom pick it for the day, for the week, and for the month. If, however, we were to close below 579.84, now I don't show the 1% margin here, but you might want to throw that into the mix. 5.7, take you down to 573 and change, I'm guessing. 573 and change, 573.05. I don't know. I'll let you do the math. 574.05. If we close below 579.84, we enter a new 2 to 3 month sell signal that should result in a test of this longer term 3-year channel bottom at 462.70, where yes, indeed, we could bottom out through all of 27. But I don't expect 462 unless we close below 579.84. And if we happen to rally and close back above 667.90, I see, actually I've got 663.34. Bear with me here for just a second because, yeah, I would rather you use this channel bottom, 667.90. There's different structures here on this next chart, and that is the low of the high. You've got a descending channel top. They all come in at 663.34, but combine the two into a range of sellable resistance that can contain buying into April trade and below which expect 579.84. But if we do close above 667.90 over the next week or two, that would obviously also include 663.44. I think we can begin anticipating over the following 2 to 3 months, 785 to 796 as an objective. But not unless we close above that 660s resistance, 667.90 on that particular chart. Moving on to Alphabet. Alphabet's been in a sell signal now for over a month following the settlement below this rising channel bottom. This after a sustained, incredible vertical move that started with April of last year. So we're almost a full year into this. And it was back in February that we threw off a key reversal high, new all-time high. We closed below the previous week's low. That is a sellable sell signal in itself. We waited another week for the settlement below this channel bottom, and now still anticipating 234.50, over the next, I'm going to say 3 to 5 months. So if the market, Alphabet, rallies into the 317 to 322 area this week, it is an opportunity to play the short side in Alphabet, then anticipating and still anticipating the 230s over the next 3 to 5 months. On the way down, we do have 296.12. This is a level that we actually opened below last Monday, certainly closed above. This sort of new low, higher settlement on the week is kind of a neutralizer of bearish momentum. And I do think 322.34 is in play possibly this week. But if we close below 296.12, I think you can forget about any upward retracements to this 322.34. And we should see just sort of a sustained descent. I see a gap here, 261. 264, that would be kind of a 3 to 5 week target, etc., etc. On to Amazon. Amazon threw off a buy signal a couple of weeks ago when it closed above, the high of the low, trying to get that line created here, and I'm just going to give up. But it is this high. 211.17. We fell back below it last week, kind of a neutralizer. I still like bottom picking though right now, the upper 190s. 198.79 is the low settlement price from a month ago, and 199.84 is this descending channel bottom that while we closed below it about a month ago, we didn't follow through. It is still a respectable technical support area. Can it contain selling, through the second quarter? No. But into April trade, and from here we actually could round up into the 230s over the next 2 or 3 months. If we close this week below 198.79, then yes, by the end of April, expect this channel bottom at 181.58. This is a solid bottom picking zone in the low 180s for Amazon that may contain selling through the rest of the year. Upside, I really don't want to get caught into if we close above this level or that level because we've been there the last couple of weeks without any upside follow through. I will just say as far as Amazon is concerned right now, you can bottom pick the upper 190s, anticipating the 230s, 235.22 to 237.32, descending channel top, former rising channel bottom where the sell signal played out about a month and a half ago. This is sellable resistance, able to contain buying through April into May, and we can fall away again from there. On to Apple. Apple I cover every single week in detailed 10-minute video format for our subscribers at wickedstocks.com. So I don't want to get too deeply into it because it's just giving something away that others are paying for. But I can give a broad brushstroke, which is to say, you can sell the upper 280s, 288.34. This channel top has held beautifully over the last year and a half, and below which, do not discount the possibility of falling to the channel bottom in what is now the mid-190s and climbing over the next full year or so. We did it actually from December to April of December 24 to April of 25. I don't expect that kind of a collapse this time, but it could be. We could find ourselves by the end of this year in the mid-190s on the way down to 1482, a 5/8 downside Fibonacci, well suited to contain monthly, possibly quarterly lows. Now, on the other hand, if Apple can close in the months ahead above 288.34, we enter a new paradigm for Apple that should, over the following year, two at the most, result in this full channel extension in the upper 380s. Tesla we cover every day for free on our Wicked Stocks YouTube channel, so you can see all this. We've been in a sell signal for the last month below 423.54, still anticipating 328.91, this extreme rising channel bottom over the next 2 to 3 months, where profits can be taken on short positions and long entry pursued through the rest of the year. If we close this week not only above 423.54, but also, and I'll just have you can see this for free, so I don't want to spend too much time, but the low 430s, we can anticipate then this 537 6-year rising channel top over the following 3 to 5 months. NVDA we cover every single day at wickedstocks.com. You might remember it on our free YouTube channel. This is the basic, but just know that if you subscribe to wickedstocks.com or take advantage of our 2-week free trial, you can see daily NVIDIA analysis that breaks it down over the course of 5 to 10 minute video and gives you day trade, 3 to 5 day, 3 to 5 week. This is kind of a 3 to 5 week swing trade right now, buying 174.32, selling 195.90. We've been advising that now for the best part of 2 months. If we close this week below 174.32, meaningful sell signal into what is now the mid-130s and climbing, I'd call that a 2 to 3 month play where we could bottom out through the rest of the year. Inversely, closing above 195.90, expect the 210s, 220s within 2 to 3 months. But until then, it is ping pong still in the mid-170s to mid-190s. And finally, Palantir, not part of the Mag 7, but we covered anyway. We get a lot of requests. We did settle a couple of weeks ago above the high of the low after a congestive framework. Actually, I'll jump to this chart, testing this channel bottom and this former high back in February 25. It is really the mid 120s support, and following the testing of that, we closed above the high of the low 145.87. So we are expecting above 145.87 still. This channel top at 177.89. This could be over the next 2 or 3 weeks where we could top out through April into May and fall away again. And if we close above 177.89, we have a meaningful 2 to 3 month buy signal into the 230s and climbing. A downside, last thing I'll say about Palantir is if we were to close below 125.41, we do then have a what I would call a low to mid 60s objective over the following 2 to 3 months. Did it in 10 minutes this time. Please click like, share, subscribe. I'll be back, of course, next week with another Mag 7 update. You have a great week.